Hi there traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar. Alright, so first of all, euro dollar is about to retest that key 117.20-ish resistance zone, 21 to be precise. That is invalidating if price goes above that resistance level. If it still bounces, it could still be part of that ABC that I had in mind on Sunday. Alright, so on Sunday I was thinking that this bearish momentum could be wave A, up it goes for wave B, and down it goes for wave C. So that upside we've had, indeed price is pushing up to retest that resistance, but it's going up a little bit further than I expected. It's not stopping at the fibs. It did stop here for a short while at this 78.6 fib, as you can see right there. But instead of actually bouncing to the downside, it just made a little bit of retracement and then bounced to 21 EMA for more upside. So I think that that bearish ABC pattern idea that I had in mind is not likely at this point, although technically speaking, it needs to break through this resistance zone before we have a bullish breakout potential. And also, this 117.30 is important because in that case, we will see a breakout between the third and fourth Wiz level. And that was a key zone we already mentioned last time. If it breaks above the third Wiz level, 117.30, there should be a lot more space to the upside. So let's add that Wiz level so you have an idea where those targets are. Let's do that right now. You can put it on this candle. You see price did not hit the 144 EMA, so the same Wiz levels are still valid. In fact, if it would have hit the 144 EMA, it would have had a reset of those levels and we had to use the new low. So 117.32 is key. If we get a break above that, then indeed we get that. Finally, we should see that momentum impulsive continuation towards the targets at the fourth Wiz level and the S2 weekly pivot point at 118.20. And if it pushes above that, then we could even see price accelerate towards the psychological round level of 120. Just below it, there's a fifth Wiz level at 119.65. Now, as I was indicating in the past, the price action around the 144 EMA tends to be choppy and corrective. And the best impulsive pieces occur when price moves away beyond the third or fourth Wiz level, away from the 144 EMA. Now you can see why that is so important, because all of that choppiness is not that great to trade. If you get winning trades in here, that's perfect. But many trades lose most of their capital and most of their trades in this choppiness. All right, just be aware of that. So as still indicated, the same analysis is valid if price manages to break here, pull back and continue like this, or break, pull back, continue. It could go for quite a while to the upside. So this was my original analysis. Then we had on Thursday, we had quite a strong, over the weekend on Friday, before the weekend on Friday, we had quite a strong move here, which is why I thought there was a likely to be bigger correction like this, and that this could be a wave A, that this could be a wave B, with the three-wave ABC in the blue wave B, and up it goes for a wave C. That is still possible, although maybe it looks a little bit less likely now because price is challenging resistance now for the second time. This was the first attempt, and this is the second attempt. And the second attempts are typically a little bit more successful than a first attempt. So the chances of a break are increasing. So if we get, especially if we get a bull flag pattern here and a third attempt, then a breakout seems even more likely. All right, but now it's maybe 50-50 whether we get that bigger bearish bounce and a bigger drop to, for instance, the S1, or maybe even a zone like here, 115.50 could be support, 115.75, 115.25, and 114.50. All of those three levels could be key support zones and could be bouncing spots if price makes this bearish breakout, bearish turn, and then later on breakout towards the support zone. In that case, all three could be bouncing spots for an upside. If price manages to break below 114.50, that would turn the whole analysis on its head, because in that case, there's a lot more momentum to the downside than expected, and we'll have to reanalyze whether indeed this is still basically still an ABC like this, or maybe something else is going on. All right, that's for later. Now, for the moment, if price stays above this 21 EMA, right, with a flag or something like that, a breakout is becoming more likely, or if it breaks immediately, look for a pullback and continuation. If it, however, breaks below this 21 EMA to the downside, all right, then that bigger wave C of that bigger wave B is likely to take place. So the 21 EMA is important. As long as price stays above it, you know, there's a good chance of continuation either after a flag or after a breakout. But if it breaks below it, then we might expect that expanded correction like this. Now the pound dollar is different. As already indicated in the last video, pound dollar is different because of the fact that it stayed above the 21 EMA. And you see the fractal here, this fractal, and also the previous three before it are in the 21 EMA. That's a significant sign of strength and bullish power and momentum. So we're getting a continuation, and we said that as soon as price bounces off the 21 EMA, as soon as we have confirmation of a continuation to the upside, we're interested in trading it actually also to the 5th wiz level, which we are doing right now. We're in this setup as we speak. We traded the pound dollar from the 3rd to the 4th. That was a good 80 pip win. Now we're trading it from the 4th to the 5th, basically. That's our trade setup for the pound dollar. So let's see if that works out. There's no guarantee in trading. It's all probability and it's part of risk, right? So always use proper risk management when tackling the markets. But this setup looks good to me in any case. I think that we're clear uptrend, clear break above the 4th wiz level. The only maybe worrying aspect of this long setup is the fact that the support line has a steeper angle than the resistance, which makes it look like a rising wedge, a reversal chart pattern. So that's the only concern. However, considering the fact that price is in such a momentum, I don't think that the rising wedge has, is enough to stop it. You never know, of course, but the odds are in favor of continuation to the upside. Price is at 131.50. which means that the psychological round level is around 132.50, 133. From that point of view, there's space to the upside. And I think that if we put a fib from here to here, there we go, we broke above the minus 272 target. There's space to the minus 61.8 target. You see that the 5th wiz level and the minus 61.8 target line up neatly to give confluence at 132.75, just like they did with the 4th and the minus 272 target. Price is above those key levels at the moment, making kind of a sideways flag pattern at this point here. So even if price were to make one more dip lower like this, I'm not all too concerned. I think that this is probably then just a correction, ABC correction, and I expect to bounce at the support like this and a continuation higher. So we can put a fib from here to here. And as long as price stays above this bottom, it is bullish, right? Break below that bottom would invalidate the upside. Specifically, if it stays above 78, 61, 50 fib, all of those could be still bouncing spots for upside, even if it makes a little bit of a retracement. Otherwise, there's also a chance that it stays above the 21 EMA, breaks above this resistance, and has an immediate breakout, break, pullback, continue probably on this lower time frame. And we can see a push higher right away. Okay, so those are the two main scenarios. As long as it stays above this zone, the 21 EMA on a 4-hour chart, basically, it's looking good for continuation. Even if it does make a pullback, a bounce is likely. Or the alternative is that it breaks, pullback, and then continue towards that 132.75 main target zone on the pound dollar. All right, that entire upside here could be a correction. It could be a WXY correction within a bigger wave 4. But for the moment, I think there's plenty of space within that wave Y still for a continuation higher. All right, that's about it. I have nothing else to add. For more free analysis and updates, check out elitecurrency.com, and above all, wish you good trading. Cheers.